Thank you so much. All right, before I proceed, I would want to appreciate the leadership of Edfica, particularly our founder, Dr. Emmanuel Odumusi, for this very great opportunity to facilitate this session. The session will be really short and it will be interactive as well, because I would want to hear us speak. I would not want to take the entire time just being the one talking all through. All right, so let me share my screen. While I'm doing that, I would just like to mention something right now. I was in Jos last week and I was having some conversation with some colleagues. And one of the things we said is that there's no bad business. There's no bad business. There's no business that cannot receive funding. There's no business that cannot get money. The only business that exists is a business that the owner doesn't know how to tell the stories. So there's no bad business anywhere. There's just bad storytellers. So the moment you know how to tell your business story, I tell you, there is nobody that will not be willing to invest in it. What people want to hear is the value your business is bringing. So I know a lot of us sometimes will say, oh, there's no funding available on the market for businesses. There's no funding out there. But the truth is, maybe you've not been telling your business story the way you should. So let me just go ahead and share my screen right now. I really hope that those words made some levels of sense. If I'm making sense, you can just give me a thumbs up and feel free to use the chat box as well. All right. Thank you, Olubumi. Thank you, Ayeni. Really appreciate it. Okay, so while the session is starting, I would just like to mention that we should all feel free to pen down your questions. If you have any questions while I'm talking, so you pen down your questions, and then when the time is right, Adewale will let you know for you to ask your questions. Okay, and it's going to be really interactive. So we're just talking about accessing funding, basically funding opportunities for leather artisans. But I'll tell you one thing. I was careful enough not to be too specific to leather artisans, and the reason why I would say so is that I really believe that every single funding available out there for MSMEs can be accessed by leather artisans. Every single funding available out there for MSMEs can be accessed by leather artisans. So it's not out of place, to just give you something that speaks to MSMEs in all sense of it. Right. So proceed now to my presentation. So accessing funding for businesses, for MSMEs, so to say. Please let me know if you can see my screen. All right. Okay. So this is going to be an interactive session now. I want to hear from us. Why do you think funding is important for your business? Why do you think your business requires funding? I want to hear from us. Like I told you, this session is going to be interactive. So many emojis. It's a question. I just want to hear from you why you think funding is important. Why do you think your business needs money for growth? Hello? Feel free to use the chat box. I just want to see if we can do this within the next 2 minutes. I want to get feedback from us, please. Hi, can anybody hear me?
Yes, hello? We can hear you, sir.
Okay.
We can hear you, sir.
All right, Madam Kauna, you can speak, right? Importance of funding for business growth. What do you think makes funding very, very necessary for a business to grow? Oh wow! So, Madam Kauna, I don't know if you are going to speak. I want to take some things in the chat box.
Okay, thank you, John. Really, not now, yeah, sir.
Okay, not now. All right. You're still putting yourself together. No problem. So, thank you, John. So, John says money answers all things. All right. Yes, I think it's true. Money answers all things. I imagine a lot of things we'll be able to do now if you had $100 million or 100 million naira. There's so much. I know a lot of us have plans. This is what I will do. This is what I will do. So, definitely, money is very, very important because For you to be able to push for your business expansion, you need to access funding. For you to be able to achieve whatsoever goals you set in an organization, in your company, funding is of essence. So without funding, you can't even talk about production. Yes, are you saying something? Mr. Adeleke?
Yes, I'm not saying anything. I just joined. So I'm
okay.
So I should off the mic, Ari?
Yeah, you can mute your mic. Adewale, you can help. You can help with that. So for you to talk about business growth, for you to talk about even making production, you have to always start with access to funding. There's no business that can thrive without money. Except if you want to do drop shipping. But even to do drop shipping business, you still need money. Am I correct? I believe I'm correct. You still need some level of funding to do drop shipping business. But then every business needs funding to be able to flow well, to be able to stay afloat and for it to be able to survive. And yes, a lot of ideas, but no money to actualize it. That's true. We have a lot of ideas. I mean, sometimes when some of us sit down in our business places, we just look at it and we're like, what if I produce this product this way? What if I change it this way? And then when you now sit and think about it, no, I don't have the money to do this. I need to buy so and so machine to be able to achieve this particular kind of production. So of course, there's so many business ideas, but money is always the challenge. Although I don't like saying money is a fundamental challenge of any business, but I will agree with you at this point. Money is a problem, right? So what are some common challenges faced by MSMEs in accessing funds? So this is supposed to be interactive. I would really appreciate if some of us can speak. You have probably made an attempt to access funds from maybe a bank, from friends to support your business. What are some of the challenges you faced? What did they tell you? Maybe you made an attempt to access some sort of funding. What did they tell you? What challenges did you face? Please, I will mute my mic now. I want to hear some of us speak. How we do that? Please. Hello. Yes. Kamal.
Yes, I'm hearing.
Yes. You want to say something?
Actually, I just joined the meeting. I did not hear what you are thinking this morning, but I can follow you. But I heard something about the money itself, and it's very important. So everybody needs it. So you can go ahead. If anybody has the good question, they can.
Everybody needs it. No, while you are speaking now, I want to ask you a question. Have you tried to access funding before? Have you made an attempt to receive funding?
Thank you.
Okay.
Okay, please can you repeat the question?
Okay, I see a hand up. Selimot. All right, so I just want to hear what are some of the challenges some of you have faced when you try to access funding. What did they tell you? Maybe you went to the bank or you met a friend, a colleague to support you with some level of funding, maybe a loan or to give you a grant for your business, but you did not receive it. What are those challenges you faced? Yes. Madam Selimot, you're saying something?
Okay, yes. I said there was a particular time I applied for a loan from a friend. So the limited time she gave me, so I couldn't meet up with the time, It's not bank, it was just a small, all this microfinance, but she's a friend. So before I could finish producing, she was already asking for the money. You get me? Hello?
Yes.
Hello?
I get you, absolutely. Hello, yes, hello. I can hear you. So, yes, hello, can anybody hear me? Just want to be sure that you can hear me.
Okay. Yes, we can hear you.
You see, that is one major problem. Sometimes the time frame for accessing funding is very, very short. Maybe you need this money to run for a year, but what is available they'll tell you, within 1 month, so we need this money back. So this is one particular challenge. And I see Alabi Ismail here saying high rate of interest, which is very, very true. The interest rate is very high and it discourages a lot of businesses from wanting to collect loan to support their businesses. I don't know if anybody has had a challenge now that is not external but is internal. I mean, maybe they told you the problem is with you, not as if the money is there, but maybe you don't have sufficient documentation, you don't have your books, your financial records don't tally, and that's the reason why they cannot give you funding. I don't know if any of us has faced such challenges before. Yes. Tiwa Lade. You want to say something? Hi, Tiwa Lade. Okay, I guess she's agreeing. That's why she's putting her hand up. So definitely, we will all agree with me that there are several challenges that businesses face every day when it comes to accessing funding. And a lot of times, the challenges are not external. It might seem like people don't want to give you money, but the truth is, sometimes the problem is with the way you present it. The problem is with the way you package your business. I started by saying one thing. I said there is no bad business anywhere. There is no business that cannot receive funding anywhere. What the problem really is in the way you package your business, the way you tell your story. If you package your business excellently well, you will definitely receive funding for it. All right. So let's move on to the next slide now. Now, I want us to talk about the different types of funding that are available for MSMEs. Now, in this sense, it will speak to leather artisans, that's members of CALAAN. What are some of the business types of funding that are available? Yes, Madam Kauna, you want to say something? Kauna?
A question. I want to ask the question. What's the meaning of that MSM something that you put? The full meaning of it.
Okay. Sincere apologies about that. So MSME means micro, small, and medium enterprises. I know it has been expanded now to also encompass macro. So it all depends on the level of revenue that a particular organization generates, the kind of cash flow that they generate that classifies them into certain levels of the MSME. But it just means micro, small, and medium scale enterprises. I really hope I've answered that question. So that's what MSME means. Sorry, I should have really put the meaning there. So some types of fundings available to MSMEs. You will agree with me that there are grants and there are government programs. I would just mention some at the top of my head right now. Of course, you are aware of a lot of grants that come out from the Bank of Industry. There's funding that also comes out from the federal government. For example, the NEEDIP by the federal government that has just been recently renamed. I think it's basically focused on Nigerian youths. I would have loved to present about it, but definitely I'll share it on your WhatsApp group so that we'll also outline how you can get to apply for it. That for those that are still categorized as youth, I think Nigeria categorized youths from 18 to 38, around 40 thereabout. So that funding is available. So there are a lot of grant opportunities. Grants is one of the ways. Grants is not loan. Grants is I will not call it free money, but it is definitely a type of funding that is made available to support business growth. And then there are also bank loans and credit facilities. So there's several other credit facilities aside. Sorry, I don't know. Is this the same hand, Kauna?
Oh, no.
Oh, okay.
Just go ahead. I'm here.
Okay, awesome.
Yeah.
So, as I was saying, we have bank loans and their credit facilities. So, a lot of our commercial banks have several facilities available to MSMEs. But there's always a problem. The commercial banks feel that MSMEs cannot take that kind of loan. So, this money is loan available for small businesses, but it's always difficult for small businesses to access it. Why? Because maybe your credit rating does not meet the bank's requirement for them to release the funding to you. And there are so many other credit facilities from even the government themselves, like, for example, the NESAL funding. I know that's basically focused on agriculture. The NESA funding is a credit facility, and so many other credit facilities that have been created over time by several finance institutions. They've made a lot of credit facilities. Credit facilities are basically places that you can easily access loan for your business, right? And then we have venture capital and angel investors. That's another type of funding. Now, the venture capital is simply a form of investment into your business where someone wants to buy a stake, maybe a company or an individual feels they like your business, they like the proposition, and they would like to buy a particular percentage of your company. While angel investors are basically individuals that have a lot of cash flow and are looking for businesses that resonates with their goals. Now, take note, goals as it speaks to making money, and then they are very they make those funds available to your business. So, like I said earlier, I will always refer back to it. There are no bad businesses anywhere. The bad thing is businesses that don't know how to tell their story, businesses that are not well positioned to access funding, and that is the reason why you are here today. And then we also have crowdfunding and alternate finance. This is one of the most interesting parts of business. A lot of times, we as individuals, we always wait for people to come and invest 10 million, 50 million, 100 million into our businesses. But we forget that there are several other ways that we can access funding. And one of it is that little 1,000, 2,000, 3,000, 5,000 that you can source from different persons around you, even people that don't know you. Those little monies can accumulate into very large amounts of funding for your business. That's what crowdfunding simply means. You put out a call for financial support or for investment into your business. And in crowdfunding, you might not necessarily promise people that crowdfund, people that support your business with funding. You might not promise them anything. For example, 2 years ago, I was crowdfunding for my business, and so it was on a competition, and I needed to crowdfund a particular percentage. So they said anything I get, the organization that was in charge of it, that was the Jordan Ministry in Nigeria, they were going to match it, and they had a limit. So if I had crowdfunded up to 235,000 naira, that was the minimum limit, then they would match it with that same amount, right? And I was not able to reach my limit, but it taught me a lot. I was able to get businesses that supported me little by little. The 1,000 here, the 5,000 here, the 3,000 here, they were all very available. And that funding came in, and I'm into digital marketing, and it supported me to buy some tools. Basically, I was able to get a very standard laptop. I was able to get a standard modem to support my business as at that time. So crowdfunding is one of the ways you can get to access funding from people around you. The power of crowdfunding, you may never know. For example, we have social media, Twitter, for example. A lot of times, there are several people that have been able to access funds through crowdfunding. Let me give you an example. If you can remember, early 2024, there was this lady that trended on Twitter. You all remember Momzi, the one that talked about cooking for husband by 4 a.m. Now, it's not that money didn't exactly come in for business. I don't know if you agree with me. Please, you can just put up an emoji so that we know that you are following, right? So, Momzi accessed. It was a form of crowdfunding because people just saw her account details and they kept on sending money to the tune of over 10 million naira. People that dashed her land, people that gave her land, people gave her several things. Even major brands in Nigeria also wanted to support her. For example, Kuda Bank wanted to support her. We had Infinix because she snapped a picture with her phone. So you see, the power of social media is it makes it easy for us to crowdfund. Social media is one of the very easy ways that we can crowdfund. If you can properly tell your story, I'll repeat. If you can properly tell your story, you'll definitely be able to access funding through any means possible. Interesting. Okay, and then we also have microfinance and cooperative lending. Some of us, CALAAN itself is an association, and CALAAN can also make it themselves dynamic. The organization can become dynamic to the point of carrying out microfinance, services for your members. You can also do that for your members. That's one of the ways. So microfinance and cooperative lending. So from the little money, maybe dues that all the members pay, the 500, the 1,000 that all the members are paying, so the organization can then decide, okay, let us set aside this money and use it to support our members. So any member that is in need of funding, come and get loan, right? And then you pay back to the association. So you see, these are different ways of MSME funding. Now, I want you to ignore the right-hand side of my presentation and look at the left-hand side of my presentation. Microfinance and cooperative lending, crowdfunding and alternative finance. These 2 points, right, are very, very easy. They are places that we can easily get funding. They are within. You don't need to wait from outside. There are things that are within your control, so to say, because when you're able to properly tell your story out there, you'll definitely be able to access funding, right? So you can crowdfund, alternative finance. There are different channels of alternative finance out there. Several channels of alternative finance, and then the microfinance and cooperative lending. So 10 people come together. Okay, let us do what some people call contribution. Each person brings 5,000 naira this month. The whole money goes to this person to support your business. You buy a particular tool. Next month, everybody gathers the money for the next person. Those are forms of funding for business. So the funding must not always come from out there. And take note, it is from small that people start. We have people that today they've grown their business to the point of raising funding of up to 20, 50, 100 million. And they did not do it. They did not take a loan. They did not get an investor, but it was through simple crowdfunding, simple microfinance and cooperative lending. I don't know if I'm communicating here. Right, so moving on. So what are some key requirements for funding? Now, this is for external funding, not for internal funding. In microfinance and cooperative lending, you don't need to start having certain things. But if you want to access external funding, that's now the right-hand side of that presentation, right? You need to have certain things available. First, it always starts with a winning business plan and financial projections. If I, as an individual, say, okay, let me not use myself. For example, Tony Elumelu. If Tony Elumelu were to look at your business today and want to give you funding, the big question he will want to find out is, what exactly is this business about? Where is this business headed? That's where your business plan comes to play. Everybody, there's no investor that will not want to see what your business plan looks like. What is the story behind this business? What kind of value does this business have? What is the projection as monetary wise for this business? What are the financial projections? What is your current financial standing? What's your plan towards raising funding? What is the profit margin? At what year do you think your business is going to break even? These are big questions that businesses will ask. So let me explain what it means for a business to break even. When a business is breaking even, it just simply means that the business has gotten to that point where it can now stand on its own without you having to pump in more money. And even if you take money from the business will not shake. That's the break-even point of every business. So usually, experts say that every business has 3 years to get to their break-even point. That any business that does not survive after the 3rd year and does not break even should be closed down. That's what financial experts say. Take notes. It's not me that said it. So every business plan should be able to address your break-even point. At what point will this business be able to generate enough profit for it to keep afloat? That even if I start taking the profit out of the business, nothing will affect it. So at the first 3 years of the business, any profit you generate from that business, of course, you have to put it back in because you want the business to be able to stand on its own. But after the 3 years, that business now at that point should be able to now stand by itself. You can now comfortably remove profit. But if it cannot stand, then you know that there's something faulty. So you need to revisit the business plan. And a business plan is a document, is a growing document. It changes every day. All right? And then the next one is legal and regulatory compliance. So I loved it when the CALAAN president was speaking and he said that they were even the organization was engaged by Standard Organization of Nigeria to develop standard, for artisans, for leather artisans. So it means that anybody that is not following those standards is going to be definitely be causing certain levels of infractions. You really understand? So you see, every business must have legal and regulatory compliance. Legal, we're talking about first, does your business exist? Does your business have a life for itself? That's the Corporate Affairs Commission registration. It's either you're registering it as a business name or as a limited liability company. And take note, the kind of registration you will do for your business also determines the kind of funding you attract. Yes, there are certain kinds of funding that a business name registered company will not be able to attract. And there are certain kinds of funding that when you have an LLC, you will be able to comfortably attract. So at the point of LLC, you have now only given your business a title that you've separated the business from you. So your business now has the power to stand on its own, but a business name is still very, very attached to the sole proprietor. It's not totally separate from you as the owner of the business. So every business must have legal and regulatory compliance. You can't even own a bank account without, having a CAC registration. And then now that CALAAN is developing, I don't know if that's done, but as CALAAN is developing standard documents, standard operating procedures for leather artisans, it means that you also need to have those standards and get certificates that yes, this business has met that standard. For you to be able to, for you to be recognized. Do we understand? And then you also need credit worthiness and collateral. I will not speak so much about collateral, but I'll speak about credit worthiness. That is where your books will be looked into. There is no funder that doesn't want to know if this business has the capacity to receive this funding. That's your credit worthiness. Do you have the capacity that when you receive this funding, you use it for what is expected for? And can your business still survive? Does your business have what it takes to handle that funding and be able to turn it into profits? And they need to be sure that when you collect their money, you will not run away. That's one thing with funding. When you collect their money, you will not misappropriate those funds. So creditworthiness is one of the things. Even banks are looking at your creditworthiness. Do you have what it takes to handle this money? They're looking at the fact that if this, hope you will not just squander the money and be able to turn it into profit, tangible results from it. So it's very, they need to be sure that when you collect their money, you will not run away. Key requirements, to access funding. And now we're moving to the next slide. Now, this step by step, I'm trying to streamline my session. That's the reason why you see that I try to just make them very, very short as possible. Funding. Now, they need to be sure that when you collect their money, key requirements, to access funding. And now we're moving to the next slide. Opportunities. Now, this step by step. How do you research for funding? I'm trying to streamline my session. Very simple. That's the reason why this organization that partnering with I try to just make them very, very short as possible. Funding. Now, they need to be sure that when you collect their money, key requirements, to access funding. And now we're moving to the next several funding opportunities. Now, every day, new funding opportunities keep popping up on our website. Hi, Adewale. I don't know if Joyce, if any of you are on call, you can just drop the link on the chat box, so that people can begin to check out the website. Right. So when you visit ethica.org, you'll find several funding opportunities for MSMEs across Africa. And it doesn't stop there. When you research funding opportunities, the beauty of the ethica.org is that once you're on the website, you'll find, aside the funding opportunities, there is always a section that speaks to the criteria. So instantly you will know if you meet the criteria or not. You'll know, do I meet this criteria or not? And then you'll know if you should even bother trying to apply for it or not. But it doesn't stop there. You have to also prepare necessary documentation. Several times, businesses don't know what kind of documents they need for certain levels of application. So, for example, you see a grant, $100,000 grant, for example, and then you don't know how to go about it. We have our consultant platform, consultant.ethica.org, that offers, we have tons of experts on our consultant platform that are available, to support you. So, this is the process. You look for the funding opportunity. Oh, I have identified the funding opportunity now. I don't know if I should go ahead to apply for it. Then you are looking for an expert to talk to. We have tons of experts that are available, to support you to apply for these funding opportunities. And that's where you visit the website, consultant.ethica.org, right? And then you have to engage financial institutions or investors. This is where CALAAN as an organization can now, with the support of Ethica, I tell you, Ethica is very, very much available, to prepare you to receive funding. We can support you, to facilitate engagement with funding institutions, with banks, several other funding institutions. Then we have meetings and conversations around how CALAAN as an organization can make funding available for their members. Then any member that meets the certain criteria that the banks have made available, and Ethical as an organization, we are definitely open and ready to make these things happen. I totally agree with you, Kauna. The challenges most of the business owners face today is lack of funds. I totally agree with you. But don't you think these solutions I'm bringing up here are solution enough? They are not just mere words, they are solutions. You visit our website, there are several opportunities. We also make available experts that can support you, and I can guarantee you that with our experts, you are going to receive funding, right? You're going to get the required support you need to receive funding. And it will be good if we can further conversations around, having to meet with financial institutions to access funding. Now, I'm moving on to the next slide. Some of the successful funding applications. What are some tips to be able to get to successfully access funding? Applying for the right funding. This is where our experts still come in. You need to always ask yourself, is this funding for me? Some of us are fond of putting in a lot of energy applying for everything. We want to apply for everything. It's great to apply for everything, but you will always get very weary and tired on time if you're applying for everything. But if you channel your energy and your strength into the ones that really work for you, it will just make the whole process extremely easy for you. So you have to research and target grants, loans, or investors that align with your business needs and you meet the eligibility criteria. You have to identify those kinds of business, those kind of grants, those kind of loans, those kind of investors that aligns. So, for example, now, let's say there's a funding for people in the creative sector. Automatically, you know that because you're a leather artisan, you automatically are in the creative sector and you can apply. And then there's a funding for people that are bringing innovation, technology innovation to everyday business. Okay, they'll tell you, your business must have technology innovation. Your business has the ability to have a technology innovation. Do you understand? You adopt digital tools in solving everyday solutions. I tell you, you just need to understand your business very, very well, and you'll be able to properly look for the funding. I don't know. I don't have so much time. Let me try to hasten up. So you must also have a very strong business plan. Remember, I talked about it. You need to clearly define your business model, what opportunities there are in the market, the financial projections, and how the funds that you access will be used. And then you must also show financial credibility. Like I said, every business, every investor, every funder wants to know that you are credible enough to handle the funding they're giving you, right? You need to make sure your books are clean, your books are open, you have all necessary documentation. I think the next session is going to talk about a lot of all those things. The kind of your records, keeping the right records for your business, but keep clean books. And you definitely know also that to access funding, some funders want to see how your account performance is. For example, the banks, they want to see how your account is performing. So sometimes for businesses, we like to use our personal accounts. But don't you think it's high time you separate your personal accounts from your company account? So that when you are transacting business, let it be clear. Let the cash flow be there in your business account. That's one of the easy ways that funders will be able to identify and see this person is very serious with business. And then you must also be able to demonstrate impact and scalability. You highlight how your business creates jobs. These are things that funders want to hear. That this business is solving employment problems. Is going to bring a solution to unemployment. How is your business going to create jobs? How does your business promote innovation? What kind of new ideas are you bringing around it? For example, now, okay, you're a leather artisan. Are you also thinking about sustainability? What environmental issues are you solving? That's innovation. Okay, today we have a lot of people that are converting waste to wealth. You can turn all these car tires and leathers are being merged into and weaved into materials for making shoes, and a lot of all of that. So you see, you must be able to properly talk about the innovations that your business is doing, and then how does your business benefit society? I tell you, the leather artisans are one of the people that properly are solving a lot of issues today in the environment. You are solving a lot of issues in the environment. You are converting some of the waste, even animal waste, plastic waste. You are converting them into more reasonable solutions that can be used every day. So you are providing solutions. Talk about it in your business. And then you have to also show long-term growth potential. Every business must have a growth potential. So those are all still part of financial projections. And then you have to be clear, concise, and professional. For you to be able to craft a winning business plan, to craft a winning business pitch, to be able to craft a winning financial projection, for you to be able to craft a winning grant application, you need sorry, can you still hear me? If you can hear me, please can you just do a thumbs up? Oh, perfect. So you need to have, you need to avoid unnecessary jargons, and that's why you need experts. Edfica as a solution has partnered with CALAAN, and you will definitely have very, very massive discounts to be able to access a lot of the services being provided by Edfica. I'll be wrapping up right about now. So I don't know if there are any questions for me. Hi, Adewale. So I don't know if you want me to take questions or till the end of the session.
Okay, so let's see how many questions we have, so I can know if we would have to take it to the end of the section. Or please, if you have a question, can I just see you do raise the hand so I would know before we move on to the next section, so we can quickly wrap on that. Okay, so while we wait on anyone who will have a question and we can move on to the next section, I'd love to say thank you very much, Aaron. Thank you for this amazing section. Thank you for helping our artisans to really see how they can access funding and things they need to know to help to position them well to access funding, and things they also need to know after getting those fundings. Some of the few things they need to put in order to ensure that they are able to access funding and the right way to go about it. Thank you very much. I really appreciate you. Thank you very much. Please, do you still have anyone who would like to ask a question so that Aaron can quickly help us do justice to that and we can move on to the next section? Okay, please go on, Komi Kushima, so we can move on to the next section.
All right, thank you so much. I really appreciate the speaker that just spoke right now. God bless you, sir. The question is, as a leather artisan that wanted to have access to funding in his company, now, what are the right place or right government parastatals that he needed to access those funds? So we can just list those things for us so that we will work on that. And you have told us individual how we can get funding within each other and some things. So we need those either outside the country or within the country where we can access this funding. So maybe we should just list those things to us, sir. Thank you so much.
All right. Thank you very much, sir. Thanks for the prayer. Amen to the prayer. All right. So, in response to your question around funding opportunities, so like I mentioned earlier, the federal government through the Federal Ministry of Youth already have funding for youth in business, and then there's also the Bank of Industry is always open and always available. They have their bank forms that you just have to fill and get to apply for a lot of funding. And then for other grant opportunities, I mentioned earlier that just visit edfica.org. There are several grant opportunities. Anyone that you feel resonates with you. Now, there are a lot of criteria. That's the reason why I'm trying hard not to, go as specific as possible because certain criteria that certain businesses meet and some businesses do not meet, right? So just visit edvica.org and you'll be able to find a lot of these funding opportunities on the platform there. I don't know if that makes sense, but I tell you, the website is easy to use and you will see funding opportunities on our website. All right, thank you. Hi, Diwali.
Okay, Aaron. All right, fine. Thank you very much. That's good. That's fine. Thank you very much for your time. I'm sure people have learned one or two things on how to go about the funding. Okay, so a very quick one. Okay, so while we prep up to move on to the second section, which will be the last section, I would indulge us. Okay, thank you very much, Joyce. I was about asking for this. Can we just in 2 minutes? Can we do this in a very quick time? Can we all just go up on our social media platforms? Please, when you do that, you just give a thumbs up so I'll know you've done that. Please go on. Either you have Instagram, TikTok, Facebook, LinkedIn, YouTube. Kindly subscribe, and also you can join our community. If you check the chat box now, you will find the links to all this on our chat box. You find link to our TikTok, Instagram, LinkedIn, Facebook channels, and as well as our community, our WhatsApp community. You find it on our chat box. Kindly do this for us in 2 minutes, please. I would love to have you be a part of us, get to know what we are doing, get to oh, thank you very much, Deborah. You get to see the opportunities we post by the day, because mind you, we post business opportunities, funding opportunities rather, every day that you can easily access. So by following us on these social media platforms, joining our WhatsApp community, you get to see these opportunities. This is the only way at which you can easily get it from us. We can't come to your DM and to start sharing. How many people do we want to do that for? But if you follow us on our social media platforms, you can easily see all these opportunities there, and you can click on them. The ones you think you want to go for, you can let us know, and we'll connect you with one or two consultants that need to put you through, okay, this and that, and you're good to go. So please, in 1-2 minutes, while Mr. Patrick Ita gets ready to take us on the next section, please let's click on the links and follow us on our social media platforms. Please, as you do that, kindly give me a thumbs up so I'll know, oh yes, you're actually following me and you're doing that for us. Great, Mr. Patrick, thank you very much. It's nice to have you here,
okay, sir. Good evening, everyone.
Good evening, sir.
Thank you very much for having me. Like he rightly introduced, my name is Patrick Ita. I'm the managing consultant of Jehovah Consulting Limited. My session will be brief. The last speaker has dealt with part of the preamble that I would have loved to give. I will quickly go straight to my topic. And the topic is crafting your financial future opportunity for leather artisans. Now we'll be dealing with accounting made simple, setting up corporate accounts. Then we're going to look at classification of accounts. Why do we need to do all this? You will agree with me that record keeping with good accounting structure is key for any business to survive, and also get support from investors or other individuals. So let's go quickly as we continue. Now, by the way of introduction, we need business to strive or attract support from individual organizations. It requires a deliberate effort to set every necessary record straight. These records may include legal and regulatory requirements. Like the last speaker has just mentioned some of these things We talk about CAC, that's Corporate Affairs Commission. We talk of school, that is Special Control Unit against money laundering. We talk about tax identification number. Then you have all these ones settled. Can you hear me?
Sorry.
If you can hear me, please let me know if you can hear me.
I'm hearing you and I have a question.
Okay, thank you very much. Then
please, you talk about how to follow the applicant online. So I did not see the link here. I want to join the link, please.
Okay, sorry to follow you. Break you. Kindly check the chat box, ma. You will find the link in the chat box.
Can I go ahead?
You can go ahead.
Yes, sir.
Okay, our focus here will be on accounting, which by implication will address tax and audit matters. Now, what is accounting, by the way? Accounting is generally believed to be the language of business or any economic activity. It is the basis of describing and summarizing financial transactions within any organization. Now, we have here books of accounts. Let's understand that apart from the artisan that has to do with leathers and all that, every organization, whether it's small or large or medium, needs to keep some records, and in fact, proper records to say the least. Then account model or structure that will actually show what the organization does. It is only there and then that what the other presenter has just mentioned about how to attract investors or how to apply and all that. That is only when it can come to play. Now we have here by my own left hand, you have journals, then you have ledger. If you look at the journal here, we are looking at purchase day book, sales day book, return inward book, return outward book, general ledger, and then you cash book. Now, if you go to the right hand, yours may be left hand, then you also have cash book, general ledger, debtors ledger, and customer and creditor ledger. This debtor ledger is also referred to as receivable or receivable ledger. The creditor ledger is also known as payable. According to International Financial Reporting Standard, we call it payable and receivable. Now, let's take the left side. This debtor ledger is also referred to as books of account, receivable or receivable ledger. The creditor ledger small or big is also known as payable. Purchase day book, according to International Financial Reporting Standards, you are buying without paying cash immediately. What that means in essence is that cash transaction is completely outside it. Then it's the same thing with sales day book. We are selling some things on credit. Let me just go back to that purchase day book. Like the artisans, they need raw material. Let's also understand that the raw material they need to do their work, they actually finished products of some organization, but they are raw material for them. So some may be bought outright, that is across the counter, that you pay cash. Other may be, bought on credit. That is the one that we now talk about purchase day book. It's the same thing with that sales day book. Now, let's mention return inward. In business, sometimes when items are bought or sold, the tendency for the supplier or the buyer or the seller, to detect whether there is any, something that is wrong with the defect, we call it defect, or it could be anything. Then they may want to return it. When you are returning it back, because you have sold it out, it becomes more return inwards. But when you are now return outward, that means that you bought something and you discover that what you have just bought, maybe a leather or something that you want to use to do your bag or anything, and you discover that it's a inferior one or has defect, what are you going to do? You return it. But let me quickly also mention here, while you are dealing with it, we must not forget the issue of invoice. Before I go further, I need to point out here, there are two types of invoices. Number one, we call pro forma invoice. That one is just you walk into a shop or walk into anywhere, you ask the person, let me know your price list. And those price lists are given to you. That does not make it to be what you are going to pay. You negotiate it further. By the time you reach a compromise on how much you want to buy or how much is going to sell, the compromise is reached. Then invoice can be issued. At that point, or when item is sold and you have taken possession of it and you to pay later, invoice must be issued to show the quantity you have bought, the date you have bought, the organization, your both the seller's name and the buyer's name, both the company's name and the other one's name as well. This is exactly how invoice is dealt with here. Then let me move to journal. You know, general journal, let's understand that journal itself is not an account. We use it to do some what we call correction of some errors, or when you want to change one item which had been posted before. Instead of you cancel, what are you going to do? You raise a journal to correct it. And I need to point out here that there are some things I'm going to mention here that because of the wider audience, I will also dive into some real accounting issue and also mention some things here. Not all of them, the artisans, the business owners, not all of them that are able to do on their own. And that is why we have professionals around that can guide them and also support them to ensure that those records are properly kept. Do we understand that? If you can hear me, do we understand that?
Yes, yes.
Okay, that's fine. Then we have cash book. Under the cash book. Okay, thank you very much. Under the cash book is not provided for you to determine your profit or loss. No. The cash book is determined, basically, number one, we use cash book. It's good for bank reconciliation. Your transaction between your bank and your clients, talking about your vendors. That is completely different from the first two that I've just mentioned, purchase day book and sales day book. I believe that is well understood. Now, I want to move to the ledger. Now, since I've dealt with that cash book, let me quickly go to debtors or receivables ledger, or creditors or payable ledger. Here, these are key issues that every organization, no matter how small it may be, must not ignore. You know, in the past, I want to share this before I make further. In the past, they try to, cash thief and all that, or they want to do that. But in the 21st century accounting, we try to prevent and we put control in place so that everything will be fine, not looking for who will manipulate the system. I believe that is well understood. Then, as we make progress in this discussion, I will also show you the aspects of ledger, how they are going to be kept and all that. Is that clear? Now, here we have accounting process. Very, very important. You have identification of business transaction. Now, as a business owner, what are those transactions that you may need to do? There are some that you need to place what we call LPO, local purchase order. There are some that you may need to go directly to where the suppliers are for you to buy. There are some that you need to put a call. Once the business transactions are identified, what are you going to do? You are raising the source document. What are those source documents? The source documents are those invoices, are those receipts, are those initiating transaction, approval obtained for the one that need to get approval. All the processes are followed. That is the source document we are talking about. Why do we need all this? All this one will guide you as also part of what we call tax planning. When your books are properly kept, when your records are properly maintained, when you have all the documents that back up your transaction. By the way, let me tell us something. In the past, accounting, they are known to figures. But in 21st century accounting, there are what we call facts behind the figures. Those facts behind the figures, they are the source documents that we're talking about today. And if those source documents are not available, you may not be able to really plan well to see how you can secure either grant or loan and all that. Do we understand that? Please, if you understand that, let me hear you. Do we understand that?
Yeah.
Yeah.
Oh, thank you very much. Now you can see the next one, posting the financial data to the ledgers. I've mentioned it before, casting and balancing of the ledgers. You have trial balance. Then you have incorporation of other information to the account. If you look at my slides here, you can see the first one, you see bookkeeping. Then the middle one, you see financial accounts. Then the last one here, you see financial analysis. Before that one, you see preparation of financial accounts. And we're going to get that shortly. Now, all these one, they are steps that every business-minded individual, organization need to follow. Before I go further to the next slide, when you are writing your invoice or you are getting anything, remember that your name is different, distinct from the organization itself. Organization itself is an artificial being. You are separate. So when you are doing anything, make sure that you use your organization's name so that the ownership will not be in doubt. Now, I want to go to the next slide. Now, we have a classification of accounts. Left, you have personal accounts, you have impersonal accounts. You can see debtors, creditors, bank, capital, and stuff like that. Where there is need for me to emphasize, I will emphasize. I don't think we have any challenge here. And in personal, you have real accounts, you have revenue, you have expenses, or stuff like that. Now we have setting up corporate accounts. Let's pay attention closely to this. For any organization, I've mentioned before, and the last speaker also mentioned that you need to have proper thing for you to really approach any organization for you to secure loan or funds. Now, there is what we call chart of account. What is chart of account? Chart of account is a listing of the account that a company has identified and made available for record transaction in its general ledger. What that means is that you look at your business. What are the transactions that I need to do? From the beginning, you will be able to identify them. You list them out. Then you attach a code to each one. When you attach a code to each one, if you are using manual, I'm going to get to that later. If you are using manual, then you can separate them. But if you are using electronic, that is very, very fine. A touch of a code, a touch of a button, it will give you information that you need. Then I've equally mentioned ledger before. I want to explain ledger now. A ledger is a book containing accounts in which the classified and summarized information from the journal is passed as debit and credit. Here, I don't want to dwell on issue of debit or credit because of the audience. Now, somebody will ask, so how do I know the one I'm going to debit? How do I know the one I'm going to debit? So, I mean credit. I want to use paying out or receiving. That will be better for me under this scenario. Now, when you give out money to somebody, or maybe you want to order for item, a product that you want to use, if you have not paid for that product, and that product has already entered your business, what we are going to do is that for every individual or vendor, whether it's bank, if you have 5 banks, I hope you are, can you hear me? If you can hear me, say I can hear you.
Yes, sir. Yes, sir.
Okay, thank you very much. Now, if you have 3 banks,
yes, I hear you.
Okay, thank you very much. If you have 3 banks or 2 banks, you create a ledger for each bank. Don't model them together. Then all your vendors, no matter how many they are, you create a ledger. That ledger means that you write the name of the person. This is the person I'm dealing with. Okay? Then, except for one-off transaction, what we mean by one-off transaction is this. If you go to any market to buy items, you didn't know to. I can hear interruption there. Can you hear me? Can I go ahead? Can I go ahead?
Please go on,
Yes,
sir.
sir.
Okay, thank you very much.
Please go ahead, sir.
Okay, fine. If you go to any market to buy item, we call it payment across the counter. Is one-off. You don't need to create any ledger for it. You can either expense it or you capitalize it. How do I mean? If you want to expense it, that means that you are going to charge it to where you want to prepare your profit or loss account. If you want to capitalize it, you will take it to where we call statement of financial position, or what they call balance sheet in those days. Is that taken? Now, let me come to this ledger again. We have 5 types of ledger accounts. We have assets, we have liability, we have owner equity, we have revenue and expenses. All this one must be created because a professional accountant who will visit your facility to audit your account, if those records are not there, it will make the job very difficult for them. And even if you want to approach any organization to support your business, you will find it very difficult because your record may be seen as not complete. Now, the last one here is a trial balance. A trial balance is not account of its own. It's just the transaction you extracted from your ledger to see whether those transactions are okay or not. Even though when your trial balance appear to be okay on the surface, there could be some things that may be wrong with the account. I won't, maybe that will be for, maybe as we make progress, I also mention something that can happen. I want to go back, I want to go to financial statements, understanding financial statement or report. Now, financial statement or financial report is actually the same thing. Either you can call it financial report or you can call it financial statements. What are the components of financial statements? You have statement of financial position. In the past, they call it balance sheet. Some organizations still call it balance sheet. But international financial reporting standards saying we should call it statement of financial position. Now, income statement is also known as profit or loss account and other comprehensive income. This is also in line with international financial reporting. Value-added statements, you have a note to account and quite a lot of them. But because of where for this audience, I will dwell more on statement of financial position, income statement, and cash flow statements. Now, there is what we call elements of financial statements. What are those things that we can see when you pick any of the financial statements, whether it's statement of income statement or financial statement of financial position or any of these ones? What I've listed here, you are going to see them. We are talking of assets, we are talking of liabilities, we are talking of revenue, we are talking of expenditure. Now, the assets are basically classified under 2 major ones. We have what we call non-current assets, non-current assets, then current assets. Non-current assets, in the past, we call it fixed assets. But I want to tell the audience here that the stage where we are now, nothing is really fixed in account in the world, really. I want to give you an example. If you have a land where you call it a fixed asset, the moment you put a structure on that land and then start using the structure to generate revenue, the land has been altered. It is no longer fixed. Do we understand that? Do we understand that? Please, if that is understood, let me know.
Yes, understood.
Okay, thank you very much. Now, I want to give you another example before I make progress here. If you have a vehicle that are using for your operation, you don't use it for any other thing than operation, you pool vehicle or all that. The day you said no, this vehicle, I now want to start selling them to generate revenue for the organization. The vehicle is no longer fixed. It become what? Current asset, because you buy and sell. That is why we don't call anything fixed in accounting in the 21st century. Now, liability, of course, when you place an order and the raw materials or any other thing have been supplied to you and payment is yet to be made. Let's get that very clearly. Payment is yet to be made. What happened there is that a liability has been created. How do I mean? You have the money with you, you have the product with you. That means that the liability has been created. So the ledger that I referred to initially, maybe the co-founder of Africa, I want to use his name for instance. The doctor has supplied the animal skin, right? Maybe from Kano. That animal skin has been supplied to him, and because he's now owing I will call that person vendor or the supplier, he's now owing that person. What are we going to do? He's going to create a liability for that individual because he is now owing that person. A liability has been created, meaning that he has to, I will try to minimize using debit and credit because of the audience, but you have to credit the value of that item, meaning that you are owing the person. The moment payment is made, you debit it, meaning that you have paid the person. It will now either nil it or reduce it. That is what we call by what? Liabilities. Now, revenue, that is very simple. I don't need to dwell on that. Whatever thing you have sold or you are selling to bring in income, you can call it turnover, you can call it revenue, you can call it any all the same. Then expenditure, of course. What you now, in the process of bringing those items, they're going to incur cost, the cost of buying that thing, the cost of transportation, and the cost of even warehousing and all other things that we will be associating with it. All these ones can be done in two ways. One, you can expense it, meaning that you have to write it off immediately, and that will go to your profit or loss account, we are going to see shortly. Then, if it's something that's going to be capitalized, what it means in essence is that you won't expense it, that you won't write it off immediately. You take it to what they call in the past balance sheet. Then there is going to be like depreciation you are going to charge subsequently. That is what we mean by capitalizing and expensing. I believe that is well understood. Now I want to look at now financial report sample. Now we can see financial report sample here. The first one here, statement of profit or loss, and other comprehensive income for the year ended at the 1/12/2024. Now you can see turnover or income or revenue, you put a figure. The cost of sales is a direct cost that you can link it to the product that you have bought. We call it direct cost. Then once you have that, you can get what we call gross profit. Then you have administrative expenses. Those administrative expenses, your salary, your transport, your airtime, your logistics, and any other thing that is not a capitalized item, you push it here. By the time you have that, you now have your profit before tax. Now, this profit before tax is, okay, by the way, a Finance Act 2020 and even CAMA 2020 and the Finance Act 2023, if your business operation generates a turnover of less than 50 million in a year, you are not expected to pay any tax. Let's get that understood. But if your turnover is more between 51 and above, up to like 99, up to 100, you will pay 20%. But the moment it's more that, then it is now 30%. In all this, there is also education tax of 3% before it used to be 2.5 and all that, but it's now 3%. Then you have police fund, police trust fund, that one is 2%. Then the professional will help you to do all this. This is not expected of someone who is not a professional accountant to do, but it's important that you understand this so that somebody will not come and say, what are you doing and all that. That is the essence of this aspect. I won't dwell so much on it because it is not, because of the wider audience, that's why I'm presenting this. Now you have a sample, a format of statement of financial position. In brackets, we call it a balance sheet. Your asset, number one there, we call it non-current assets. I've explained that before. Then property, plant, and equipment. This property, plant, and equipment, you have your motor vehicle, you have your land and building, you have furniture and fittings, you have all other office equipment. You can, where this one is going to prepare, you do it there. But we carry the sum at the year end to come and put it here. Then you have your investment. Then you have your current assets. Current asset is for another day, but it's very, very important. It's a big topic of its own. In fact, financial outlay is heavy on current assets. And current asset is an environment where a lot of manipulation cannot happen. So I will advise every organization to have the proper records of inventory management. Very, very important. Now, you now have trade and other receivable, cash and cash equivalent. You have total assets. You have equity and liability, your shareholding, the revenue reserve, and stuff like that. At the end of the day, you are going to have total equity and liability. That will form your statement of financial position. Why do we need to have this? For any serious-minded business person to say, I want to support you, I want to help you, I want to fund you, I want to invest in your business, all this one must be maintained and properly analyzed to see whether the business is doing well or not doing well. Nobody wants to, even educator that is supporting. By the way, let me digress a bit. I think last year, about 50 candidates or applicants, I'm not sure if there are more, Eduafrica supported them financially to register their business. I think if it were to be a practical thing, I would say put them together for Eduafrica. They have demonstrated concern for people to grow, even financially. Now, back to my presentation. Now, statement of cash flows. Now, you can see the start cash flow for the year ended at 1/12/2024. Cash flow is divided into three. There is what we call cash flow from operating activities. There is another one we call cash flow from investing activities. The last one is cash flow from financing activities. The one for operating activities, those profit before tax, the adjustments you need to make for items that are not cash related, something like depreciation, it will come under this place. Then for cash flow, for cash flow from investing activities, a purchase, purchase of something that when you sell something, you buy something like an asset for you to, sell and all that. It will give you that something like property plant and equipment that falls under that. Then you have cash flow from financing activities. This is where the speaker mentioned funding, where if you have to borrow money from bank or borrow money from investors or borrow money from anywhere, it also comes under this category. Now, I want to now come to the second or the last part of this. I mentioned to you under that processes of how account is structured. The first part you have bookkeeping. The second part you have a financial report where the account will be prepared. The last one you have analysis. That analysis, that is where the auditor or financial professional accountant, that is where you dive into. And as a matter of fact, this is also one of my area. I am a financial analyst, by the way. Now, under your financial report, you have what we call ratio analysis. Now, if I'm to give you money, or maybe you want to borrow money from bank, the bank will just look at, review your performance. They will pick they will demand for your financial report or audited account. Now, this audited account, it comprises everything that I've just mentioned here, of income statement, statement of financial position, cash flow statement, change in equity, note to the account, and value added and stuff like that. So they will now review it to see whether the organization is viable for them to, put their money or put their interest in. That is why it's very, very important to deal with this aspect of the transaction. Now, I decide to limit my area here to 4: profitability, liquidity, efficiency, and solvency. The question somebody may ask is that, why do you have to limit your analysis to this? Number one, I want to determine how profitable the organization is. Are they making any headway? Is there a profit? Is there a breakthrough? Or have they been recording losses over the last 2 or 3 years? I need to look at that. Then, if the organization is making profit, I need to ask, how liquidity is the organization? Hi, let me know if you are still following. Do we understand? Are we following?
We are still with you, sir.
Okay, thank you very much. Now, they want to know how this organization is. There are what we call paper profit. How do I mean? You may have profit on paper, but the money will be nowhere to be found. Now, the organization will also know, if I put my money into this place, do they have even money to settle liabilities or obligations as they fall due? If the question is no, why do I need to put my money? What is really wrong with the account? Why are they making profit and there is no money? I need to find out. Then efficiency. Under the efficiency, I've mentioned inventory that is very, very key, very, very crucial in any business organization. When you hear in those days where they call about the creative accounting, window dressing, or cosmetic accounting, it is one of the areas where a professional accountant can manipulate things. Because if you reduce your total inventory, it will affect your profit. If you increase your inventory, it's going to affect your profit. So, and all other things. So here, I want to know how well you manage your inventory. How is your turnover? How is your payment payable periods? How is your collection period? All these all need to be dealt with, so that we'll know whether the organization is doing well or not doing well. Once I'm satisfied that this organization is doing well, I can assure you people will naturally say, okay, let me support them to grow higher. Now, solvency. There are some things that can make organization to become insolvent even when the profit is being made and the books are fine and all that. So I want to also dive into this, whether the organization, if I put money, it will not collapse the next day or the next year. And this has to do with, if you go to where we call activity ratios, you can see operation there. Another one that I've not mentioned here, interest cover. The loan you obtain from banks or any other person, do you have enough money to address the interest and still remain in the business? All this needs to be dealt with for you to really have this thing done. Now, I want, in conclusion, there's one aspect I want to go, but in conclusion, before I go to that conclusion, I mentioned tax matter here. I mentioned invoicing here. I mentioned auditing here. Auditing is just where the financial accountant has stopped his work. That is where the auditor will begin his work. Auditor will review this, analyze everything, and advise management whether the organization is doing well or the organization is not doing well, and what is the way forward. Auditor will deal with all this. The bottom line is this: all the areas that I've just covered, let's understand that because of the wider audience of this training, I have to go through all this. But specifically for the artisans, I want to mention here that the preparation of financial report is not meant for you to do it. You will engage a professional to help you do it. Another thing you need to do also is that the tax matter, you may not be able to handle any tax matter, but your tax planner or tax advisor or tax consultant will be able to guide you to reduce your tax without going against the law of the land. Tax evasion is criminal. You can go in for it. But if you want to avoid your tax, do your tax planning, and you are not going to infringe any regulatory body and all that, and you are free to go. Now, before I come to this, I mentioned auditing and accountability. Let me just say something here. In Africa or in Nigeria, it's very difficult for auditor to go to jail, but very easy for accountant to go to jail. Accountant can go to jail for money that he has not even spent at all. But because of the protection of law that the auditor normally puts some clauses, auditor will tell you that based on the available information that you have given unto him and the record he has at his disposal, it is on that he's expressing his opinion. And the auditor will go further to say that if there are anything that he is not sure of and the management is unable to provide, auditor will put a clause. He can actually qualify an account. What I mean by qualifying an account is that auditor can say the account is okay except for a certain thing. Auditor can say account is fair, subject to. In that case, some of those clauses the auditor used to put is the one that we call the safeguard for auditor. So what we are going to do as a business person is to make sure that all your records are well kept. But before I go to the final conclusion, I mentioned all these variables, all these parameters that are going to use. These can be streamlined to maximum of 4 books. I repeat, all these things can be, reduced to maximum of 4 books. And what are those 4 books? Number 1, your asset register. Very, very important. Very, very important. Number 2, your inventory. Number 3, your ledgers. Number 4, your cash book. Now, that cash book, you have what we call impress or float or petty cash from it. We normally, each time I have a privilege to, settle books of account organization, I always ask them that they should not spend money from their takings. How do I mean? They should not spend money from their revenue. Rather, they should create an impress where they can spend from. That will help them to know the inflow to the organization and even outflow from the organization. Then let me come to, now in my conclusion, it is in your hands. It is in your hands either to have your books well kept, maintained, engage professionals who will guide you so that you can scale up your business, get necessary support from both local and international organizations. It is now in your hands. Thank you very much. Questions?
Oh, great. Thank you very much, Mr. Patrick Ita. Please, can we keep a round of applause for Mr. Patrick Ita? Thank you very much, sir. That was a very great section, and I'm sure that people have a lot of questions as regards their accounting, what they need to do. This, put this together. How can I go about this? Okay, so can we? Okay, if you have questions, can we use the raise hands button so that Mr. Patrick can help us do justice to that? This in the next 10 minutes. Let's answer questions. Please, if you have questions, let me know. Okay, Tiwalade Ayola, please go on. Then any other person that has question, please, you can freely use the chat box.
Okay, the question is, please, he has really inspired us in keeping books. But if we want to keep books as a sole business owner, will all this be applied?
Okay,
Will all this be applicable? Actually, we believe that keeping books is very good for a very big company. Like you are having a business that has like 5-10 workers. That's where bookkeeping is always good at. So as a sole proprietor, you're the one that will get your material, you're the one that will make your shoe, your bag, your whatever with this our leather artisans workshop. So is it very much good for us? As in, I want him to lay more emphasis on need for leather artisans to understand why and the needs we have to keep our record books, sir. Thank you.
Okay, thank you very much. Do I answer or I should wait until everybody asks question? I should go ahead.
Okay, I'm trying to see if we have
Right.
a person.
Okay, thank you very much for this important question.
Hello, I have question.
Okay, you have a question.
Hello.
Please
The
ask
last
your
speaker.
question so you can answer her.
The last speaker, you mentioned something. You mentioned 4 types of things that we're supposed to do. The first one is asset register. I got that one, but the other 3 ones I forgot. I want you to remind me. Maybe bookkeeping is there, I don't know. Asset register.
Okay, let me just quickly mention them. You need to keep asset register. That register will tell us the assets you have, like the non-current assets you have, which is a table, computer, vehicle, land, building. Keeping that assets register, the date in which that asset is acquired, the cost of that asset, the code or the number with which one can identify the asset. Is the asset in the name of the organization or individual's name? I mentioned it. Assets of organization must not be in doubt. That means that you, as an individual, you are different from the entity that you have formed. Entity is an artificial being and it should be treated as such. So you keep that register. Then I equally mentioned, cash book. Why do we need cash book? The cash book will help you to do your bank reconciliation. The cash book, another aspect of it, you have what we call floats or impress or petty cash. Now, you move money from cash to your petty for you to spend. I've mentioned it before that don't spend money from your revenue, no matter how small. Make sure that the revenue is banked, as it were. You don't spend from there. What you are going to do, you create a small account. Not account really, you will call it impress. Okay, you can call it account impress, so that you can be spending money from there, transport, airtime, and stuff like that. Do we understand that? Then I equally mentioned. Let me go ahead. I equally mentioned inventory. I say inventory is very, very important. It is the inventory aspect that you will know what and what, the leather, the skin, the what and what you have brought in for you to produce what you want to produce. You have your raw materials, am I right? Then you will also have work in progress. You also have what we call finished goods. All this one must be properly kept. You move raw material to production room. From production room, while the product is ongoing, we call it work in progress. By the time that is done, you take it, once you are able to produce a handbag, a belt, a hand watch, or whichever thing you are producing, it becomes what? A finished product. You have to become keep the record of this finished product, your raw material, you will not be able to know how much you have spent in generating revenue for you to prepare your account. So it's very, very important that this record is well kept.
Thank you.
Okay, is that okay?
Yes.
Then I mentioned ledger.
Okay.
Someone will say, what is the difference between ledger and cash book? I've told you cash book helps you to deal with your bank reconciliation. Ledger as well can also help you to do bank reconciliation. But in your cash book, you are dealing with, apart from transaction between you and your bank, you also have transaction between you and some other people. Do you understand that? Now, the ledger, I've explained the ledger aspect to you before. The ledger for every individual, a vendor, a supplier, your bank that you are dealing with, you create a book. This one I'm saying, not that you are going to open, buy many textbooks, exercise book to create, no. You can use one exercise book, long notebook if you don't have a computer or anything, but I want to advise that in the 21st century, everybody is expected at least to have something like that. Then we can design it for you. Just a thought of a person, this information will be seen for you to use. Then, hello, hi. Okay. Now, why it is important again is that you won't know how much you have incurred in generating revenue if you don't keep those records. But we can streamline this record further to 2 major books using one long notebook for those who are working on manual. But for those who are using computer, we can limit it to that 4 books. Then you have those ledger using Excel, if you have a software and all that. That will be that we can deal with that one there. The essence is that at any given point in time, you will know who and who is owing you, who and who you are owing, and what is the state of your inventory. Am I running out of my inventory, or am I overstocking my store? All these records, we call it inventory management. It will help you so that you don't run out of stocks, and also you don't tie your money in form of inventory. These are some of the reasons why this record is important for every business owner. And if you have not registered your own business, I want to advise you that go and register your business. It may not be limited, you can just business enterprise so that you can open an account in that business, then you are now using the business to transact with other people. People will naturally be more comfortable to deal with organizations than individual. That is the honest truth. Thank you very much. Now,
I have one more question.
Okay,
the
go
other
ahead.
time I heard that I have not joined your social media handles. So maybe I want to ask, I have not joined you on social media, understand?
Okay.
So what I want to say is that maybe you can share it with CALAAN platform that we can be able to join, or since you have our data, because I registered before this program, maybe you can send it to our mail.
Hello, sir. Can I
how
break
to
in?
join you?
Can I break in?
Okay.
Okay, don't worry. We'll share the links on the CALAAN WhatsApp platform so that any other person can visit the WhatsApp. Yeah. Thank you very much.
Okay. Thank you.
Do we still have any other question in relation to the sections we've had? If we have other questions in relation to that, so that Mr. Patrick can help attend to that.
Actually, if you can see, you see that I'm not stable. I went out, but what I can bring as an advice is that maybe the video of this thing or record of this thing, maybe you can also share it with us, maybe through the mail, so that we can listen to it clearly and pick whatever we want to pick. So if you have any question, we can continue to chat you on the platform.
All right, no problem, sir. Yeah, the video is actually, you can always find it on YouTube. So when we send the links to our social media platforms, you can find the video on YouTube, and we can send the link we'll send the link as well to you to make it easier for you to access it. Yeah.
Okay, thank you very much.
Thank you very much.
Very good. Okay.
So, I think that's all we have for questions. I'm not sure we still have any other questions. But Mr.
Adewale, sorry.
Okay, please go.
Adewale, sorry. Okay, so someone asked a question first, and I think the speaker has not addressed that. I think importance of bookkeeping, if I'm not wrong, if I'm not mistaken.
Okay,
Sorry,
I think I've actually explained, but let me just start again. The importance of bookkeeping is for you as the business owner. Number one, you may not be able to track the record of your performance if you don't keep those records. Number two, if you want somebody to support you financially to grow your business, the person will want to see your financial structure. You have a structure that is self-sustaining, that when you are there or anybody comes in, the person will be able to start from there. Number three, it is only when you have those records available that proper financial report can be prepared. It will cost you less if you maintain proper records. No matter how terrible account will be, as a professional accountant, provided you have your invoices, your receipt, and you have your bank statement, we can work around it, but we charge you more than when you have your records. If you don't have your record, to be honest with you, you'll just be spending, you won't even know whether you have eaten from your capital. How do you know? How do you determine whether you are making profit or not when you don't have your record? How do you know the cost of your raw material for you to know how much you are going to charge after you have finished the product? Those records are supposed to be maintained. Your transport, your airtime, whatever thing you do in the process of generating revenue, those records must be properly kept. So that when you pick those records, you analyze how much have I spent so far, how much have I generated, or how much am I going to charge for a product. It is your record keeping that will help you to do that. And it is your record keeping that will also help anybody to come and see what you are doing. If you don't showcase what you have invested through that record keeping, nobody will want to support you financially or otherwise. Have I answered your question? I can't hear you. Have I answered your question?
Yes, you have, sir.
Okay.
Thank you.
Do you have further question on that?
Okay, I'm sure the person that asked doesn't.
Okay, you know what you do. Even the market women who want to buy items in the market, ingredients in the market, when you list those items, onion, pepper, and stuff like that, it will be easier for you to stick to it when you go to the market. Otherwise, you will see something that you have not planned for, you just buy it. By the time you come back home, I carry a wise amount to the market. What did I buy that I've spent the whole money? Have I lost anything? When records are properly, if you prioritize your things, records are properly kept and maintained, it also helps you in your cost reduction. We call it cost reduction without quality reduction. You know where you are going higher, where you are going low, and what you need to do to scale up your business. It is only through record keeping. So I want to advise you, if you have not done that before, please go and start doing it. And again, not only that, the assets you bought, there are what we call depreciation, and there's also what we call capital allowance. The value of your asset, we charge capital allowance to third of your gross, then we deduct it from your turnover before we apply tax. It is also just like an incentive in a way, because depreciation is not recognized by tax law. So if you don't keep those records, how do you know how much you have spent for those assets? So it's very, very important. No matter how small, make sure that proper records are kept. Thank you very much.
Hello, please, can I suggest something? My own is a suggestion.
Okay.
Please, if you don't mind, can we be having this training like often? Like once in a month, something like that? Because this kind of training is really help. Like we have achieved a lot here. The training has impacted in us very well. But please, my suggestion, can we be having it like often, like once in a while with different topics?
Ed Frecker, the doctor is in the house, and the team they're in the house, so they will be able to address that.
Okay, ma'am. Yeah, we actually have trainings. We have webinars like this. Don't worry. Once we have webinars like this, you would always get notifications so that if you would love to join, you can also join the training. So don't worry about that. That's not a big
Okay.
problem. Yeah. Thank you very much.
Okay. Thank you very much, sir.
Okay, so I don't know if we still have any other question. This is almost 5 minutes past 6 p.m. So that we can bring this to a close. Do we have any other one who would love to ask any question? Okay, so I think in the absence of no other question, I would love to say thank you to our facilitators for today, Mr. Aaron Adiola and Mr. Patrick Ita. Thank you very much for your time. Thank you for sharing with us from your wealth of knowledge. Thank you for staying with us. And to our participants, we want to appreciate those who are still on the call and those who probably maybe the network at taking them off the call. Thank you for listening. We're grateful to you. Thank you for joining the webinar today. And we're sure that you've greatly been imparted from our speakers for today. Thank you. To CALAAN, thank you very much for collaborating with Edfrica to bring up this great webinar. And to Edfrica, the rest of the team members, to our founder, Dr. Emmanuel Odumusi, and every other team member of Edfrica. Thank you very much for putting all efforts together to ensure that we have a successful webinar today. Thank you very much. We are grateful. So to every other person from CALAAN and all other people who are not from CALAAN, don't worry. You'll get links to the video on YouTube. You get it in your mail. We'll send it to you across your mail, and as well as other links to join our other platforms, community platform, and to what's it called? Our website, as well as our other social media handles. You get everything to be sent to you across in the mail. We appreciate you. Thank you for your time. Thank you. So on this note, we want to wish you a beautiful evening and a great night. And thank you very much. Thank you, everyone. We're grateful to you. Bye. Thank you. Bye.
Thank you very
Thank you.
much. You're very grateful, sir.
Thank you very much.
Thank you. Have a
Thank you
nice day.
very much.
You're very grateful. Thanks very much. Bye.